steel products across categories, the steel sector is relieved. That cheer today spilling over to Dalal Street, with counters like Tata Steel and JSW Steel clocking strong gains in early trade and also ending in the green despite the sharp sell-off that we saw. Here's what the sector is hoping for next and how the street is dealing with the news.
In a bold move, the government stepped up to support the domestic steel manufacturers who've been complaining for months that cheap imports from China are hurting margins. The imposition of a minimum support price on steel products is likely to make many imported steel products costlier, giving domestic manufacturers some breathing space. Adding to the sense of relief, the government has also said that the imposition of the MIP is just the beginning.
We will also be looking at moving to other measures like anti-dumping duties. So at the end of 6 months, we will basically take a decision on, depending upon the situation at that point in time. If by then we have already established serious injury through the anti-dumping process, then we probably will go for those measures. We want to provide a level playing field. This is important because there's been predatory pricing.
However, the government says it has refrained from setting the minimum import prices on scrap metal so that primary manufacturers can avail of cheap scrap imports. But industry is not sold on this idea.
More scrap coming into India at a very low prices, and then they can produce very low cost steel in India, and then again bring distortions in the market.
Meanwhile, companies which manufacture steel products that did not make it to the list of the 173 items under the MIP hope that this will be rectified soon.
We hope in next few months there will be MIP on engineering steels also.
Expectations aside, the government's move and its stated intention of providing more relief measures to the sector has put Dalal Street in a better mood. Most brokerages have tweaked their FY17 estimates, but many add that they do not expect the MIP to continue beyond FY17. The LSA said it prefers JSW Steel over Tata Steel because of higher domestic sales, but advised investors to exit the stock in this morning's rally. It believes MIP will result in a $60 per ton rise in the prices of Indian hot-rolled coils in FY17, but maintains its sell rating on both Tata Steel and JSW Steel, despite hiking the target price to 850 rupees from the earlier 675 rupees. Deutsche Bank, meanwhile, believes blended realizations could improve by 4,300 to 4,800 rupees per ton for steel players like Tata Steel, JSW and SAIL. This, it says, could push the FY17 EBITDA per ton higher by 2,700 rupees a ton from prices prevalent in FY16. Kotak maintains its reduced rating on Tata Steel and JSW, but has hiked its target price on Tata Steel to 220 from 170 rupees and on JSW Steel from 960 to 1,030 rupees. Bank of America Merrill Lynch says the introduction of MIP could see steel prices recover by 10 to 12%, so it continues to rate both Tata Steel and JSW a buy. However, just how effective these minimum import prices will be will depend on how companies deal with the global downturn in the commodities market. With Nigel D'Souza in Mumbai, in New Delhi, Shireen Bhan with Anshu Sharma.
It's a helping hand provided by the government for the steel sector.